I think about exotic RWAs is that these are tokenized versions of assets that are not like inherently financial. So traditional RWAs, right, like you tokenize a stock, like that is a financial asset, right? Whereas an exotic RWA, we are tokenizing a Pokemon card or maybe one day a watch. Or one of the more interesting ones I've seen is tokenized like wine and liquor bottle. It's so much of a better experience, right? Like if I was just trying to like arbitrage Pokemon cards, right? Like I have to wait for delivery of these assets. That could take a long ass time and maybe the arbitrage opportunity is like gone by then. Versus if these are all tokenized, I have instant delivery of the NFT. I can now trade that right away.
What's up, everyone? Welcome back to Shoot the Pod number 13. I'm your host, Matthew Ney, and I'm joined here by the Enterprise team. We got Patrick, Dylan, AJC, Chris, and Corbin. Today is September 8th, and we have a loaded agenda where we're going to talk about some macro, Sol DATs, Pump pushing all-time highs, Stripe's Tempo L1 announcement, host of USDH proposals to be the native stablecoin for the Hyper EVM, some exotic RWAs, and the World Liberty Financial TGE. Before we get over to the numbers and what we think macro's doing, I'm going to give we have a couple new guys on the pod, and we're going to give them a second to give a little introduction. So, Patrick, why don't you kick it off? One sentence. What are you interested in?
Yeah, sure thing. Been at Messari for the past 3 years and spending more time on Enterprise now. So joining the pod and primarily focus on layer ones and layer twos and the ecosystems atop them.
Nice. Corbin.
Yeah.
We'll shoot it over to you.
Yeah, I've been at Messari now for running up on a year, and I'm interested in DeFi, everything stablecoins, and macro.
And finally, our fearless leader, first time on the pod, Average Joe's Crypto.
Thanks, Matt. So yeah, I'm Average Joe's Crypto, AJC, or you can go by my first name, Ryan, as well. Enterprise manager for a couple months now. What am I interested in? Everything. But if I had to pick, I am a big Bitcoin maxi, so we'll go with that.
Awesome. All right, well, let's kick it over to macro. So if we look over in equity land on the month, the S&P is up 2%, hovering with all-time highs around 6,500. NASDAQ pretty flat on the month, but gold up almost 8% on the month. And then if we go look over in crypto, Bitcoin for the week is up 2.6%. Solana up 9% with a lot of that conversation we'll surely get into. ETH flat. Hyperliquid touching all-time highs, above $50 for the first time now, with up 17% on the week. Pump also up 50%. We'll definitely talk about that in a little bit, but let's start with crypto. Got a weak job report on Friday. Only about 20,000 jobs added. We'll see if that gets revised. Expectations were about 76,000. Apparently, unemployment rose to the highest level since 2021. Poly market is now expecting a 25 basis points decrease at 86%, with 50 plus basis point now in second at 11%. We'll kick it over to you, Corbin. What does this mean? What are we seeing in macro? Are we going to get a rate cut here, that September Fed decision, and kind of what does that mean for our coins?
Yeah, that's a very good question. I think pretty much everyone's focused on the upcoming FOMC meeting later this week. But prior to that, we have the PPI and CPI coming out earlier this week, I think on the 9th and the 12th. So everyone's pretty much focused on that because that will determine whether the Fed can actually cut or not. I think there's a stronger chance than the market is actually pricing in for a 50 basis point cut, even though odds are at 90% for a 25 basis point cut. We recently had the Standard Charter come out with a revision that they thought, based off the most recent job report, that the Fed would do a surprise 50 basis point cut. And then on top of that, the Mike Wilson, the CEO of Morgan Stanley, agreed that the Fed should do a 50 basis point cut and spewed the rhetoric that the Fed should start running the market hot in order to essentially grow our way out of that bubble that we have. So essentially financial repression. And I think the dovish tone implied that there is a regime change going on at the Fed and that they might actually be congruent with that. And the weak jobs report could give them the perfect excuse to do a 50 basis point cut. And then I think that's the main reason why gold has outperformed so much. Gold traders historically have kind of snuffed this out in the future, usually running in front of QE like months in advance. So I think that's a solid sign that we're going to have negative real rates here in the very near future. And yeah, that's what I think.
Yeah, I also saw Corbin. You tweeted about the following the M2 money supply, and you also tweeted about gold plus 8 weeks. Is that historically been pretty accurate, or do you think there could be some, as gold has kind of run up right now, we're getting a little delay in Bitcoin, or is that still what you expect to follow over the next month and a half?
Yeah, the 8-week lag is kind of a left curve analysis, just kind of spot checking confirmation in policies. But generally, yeah, gold has pumped before Bitcoin, and I'm willing to bet that it does again. So
Sweet, yeah. Let's kick it over to some on-chain news, or not necessarily on-chain, but affects Solana, the hat I'm wearing, where we got official announcement from the Galaxy Multicoin Jump Crypto DAT conversation over in Solana. So they're going to be taking over Ford Industries, which is funny. I was noticing the ticker is Ford on the NASDAQ, which I would expect Ford Motor to own Ford, but beside the point. They announced a $1.65 billion pipe offered to launch, would expect to become the largest Solana DAT. Kyle Samani is going to be tapped as the chairman over there, and that's kind of what Solana is outperforming everything currently on the week, besides when you're talking about the majors. So are we about to see the similar run that ETH went on over the summer, last 3 months? And is this, I guess a lot of the bearish news when a lot of this started coming out was that they're all going to be locked tokens. And so a lot of this is cash, and it's going to be all cash. So how good is this for Solana? Are we going to see this kind of trickle into the Solana ecosystem? I know Pump is also performing really well, or is that a different reason why Pump is performing? And what does this mean for the Sol ETH debate going forward?
Yeah, I'll kick it off. I definitely think this DAT will end up being net bullish for Sol. I'm not convinced that these DATs are like themselves bullish. Like, I don't know if I want to own any of these Solana DATs. I think the market is kind of wised up to what these DATs are. And we kind of see that with, I think, pretty much every DAT at this point, except for MicroStrategy's like trading below MNAV. But regardless, like whether they're lock tokens, cash, pipe, whatever it is, like there is some portion of cash that is going to be buying Sol now. And regardless, like the lock tokens are now being locked more by these DATs or whatever. And like these DATs will not be dumping those tokens; they'll be dumping the shares instead. So I definitely think we'll see some net bullishness for Sol. I wouldn't be shocked to see like Sol ETH kind of outperform from here. I would not expect, however, like the magnitude of the move to be anything like ETH's was from like July to August. I think like the market has really sobered up on all this DAT stuff and are kind of aware of the game we're playing. So kind of thinking of this like the euthanasia coaster. Maybe we're on like the third or fourth loop. There's still a loop, but I'm not convinced it's going to pump Sol to brand new highs. Maybe like a cash high or high against USD, but I don't know about a new Sol ETH high.
Did the what was the one? The WorldCoin one just went ballistic, right? It got listed. It was up like, I don't know. I briefly saw it. It was up like 2,000% or something after they announced this.
Yeah. Tom Lee is starting his moonshot investment strategy, and this was his first pick, and it's just rocketing. I actually think this is like a horrible strategy for Tom Lee and Bitmine. Like, I feel like the way you win at the DAT game is you have to truly like replicate Sailor for whatever your asset is. And Sailor has only bought Bitcoin and nothing but. And like we're on month 3 of Bitminer, and like Tom Lee's already going down the risk curve. Like I don't see this like as a compelling reason to like believe that Bitminer is going to be able to command a premium to NAV when they already are kind of pivoting away from ETH, although I guess like WorldCoin is like Ethereum ecosystem per se, but I feel like for your DAT to work, like you have to truly convince the world that you are the sailor of your asset.
Do you think people are buying this as OpenAI, like basically like a liquid way of getting exposure to OpenAI? Or do you think this is like kind of unrelated to all that?
I honestly haven't even thought about that, but I totally believe it.
Yeah, I had that thought when I looked at it, because I was like, why the fuck did this rip so hard? But I guess like, Sam Altman, I mean, we've always talked about it as Sam Altman beta within crypto land. So they're probably like, oh, great. Okay. We can buy this up and get some exposure there.
What's the connection between Tom Lee and Bitminer here?
Tom Lee's Bitminer invested in this DAT. So it's a DAT aping another DAT.
Okay.
I don't know if it's totally wrong for Tom Lee to start investing in other tokens, because his whole narrative has been that ETH, whether it's true or not, his narrative that he's been pushing is that AI and blockchain are going to converge. So if he's just, as long as he's congruent with that whole narrative and WorldCoin is related to AI and blockchain, it's not inherently I don't think it's inherently bearish that he's working down the risk curve and accumulating WorldCoin as well.
Yeah, that's kind of interesting.
If it was something completely random, sure, but as long as it's congruent with his narrative and what he's been saying, I don't know if it's that bad.
Yeah, to me the bigger issue is like if they were trading at like 2x MNAV or something like that, it's not that big of a deal, but their MNAV is already below 1. I'm skeptical of like their ability to continue raising funds to buy ETH, and like they're already working down the risk curve. Like to me that just kind of signals they're kind of losing access to all this cash to buy ETH and need to make their gains in other ways.
But did he do an ATM directly to acquire WorldCoin, or like what was the method of acquiring WorldCoin? Do you know?
I'm not sure.
Oh, okay. Because if so, then yeah, I agree.
On the Solana side, though, I would lean. Yeah, I was just gonna say I lean more bullish than bearish on Sol ETH. We talked about it on the last pod. I think Solana is well positioned here to capture some upside. I think ETH is as well, but it has just ran up so much at this point where it's in this cool off period. Whereas I still think it's early for Solana, and you're seeing that today. It's up and kind of broken out of this range. So I think it could push new all-time highs in terms of price, like USD price at some point. We'll see if it happens. On the pump side, in my group chats, I've been seeing more Solana meme coins, way more over the past week or two than I have over the past few months. So it seems like activity is picking up a bit. Pump has been up only the past, I don't know, week or two, up to around 5 billion in FTV. So approaching kind of all-time highs outside of that 6 to 7 billion range that it started off in and then dropped off. So that's good to see. And on the data side for launch pads, it's all dominated by Pump.fun now. All the other ones completely dropped off. So I think it's kind of a return to the norm of Pump.fun being the leader. We'll see if any of those launch pads pick back up. But right now it's all Pump.fun, and all the revenue, my understanding is now, or a large portion of it is being used to buy back the token. And I am a believer of the buybacks, especially for successful apps that generate a lot of revenue. So I think it's looking good for Pump.
Yeah, let's go into that buyback conversation. I know Ryan, you were talking about how it's maybe not a smart decision for companies in growth phase, and then Patrick looks like you might take the other side. So I found this dashboard for like the Pump.fun token. They're covered around 95 to 100% daily purchases in Sol, and so Pump purchasing around 95 to 100% buybacks. We could go general or just in just talking about like Hype and Pump, where it seems to be successful. But what do you guys think about projects generally buying with buybacks? You also see Helium doing it, and so we'll kick it over to you, Ryan, who tweeted about it. And so what do you think about that? Just in general, projects using revenue to buy back their token.
Yeah, so in my tweet that went viral, people missed the point. I said 99%. Like, I think there are some exceptions. I think the one that comes to mind the most for me is Hyperliquid, and that's the one that was most commonly mentioned. Some people brought up Pump.fun, but I'm actually going to take the opposite view. I'm not sure Pump.fun should be doing these buybacks. I think there was a reason why they did it to start, was to like kind of signal alignment back with the token, and I think that's like one of the major issues. But if Pump.fun is truly like trying to take on like Twitch and Kick, like they're going to need a ton of cash to onboard like non-crypto streamers. I know, Chris, you talked a lot about this, but like what does Kick pay Aiden Ross? Don't they pay him like $100 million, just some ridiculous number? Like, if you want to actually onboard these big streamers, like you're going to have to burn through a ton of cash, and like to get someone like an Aiden Ross, you're going to have to probably spend more because you have you have the reputation issue that crypto does. So like $100 million is like what, 10% of what Pump.fun raised. Like that's a significant part of their budget. Now Pump.fun wasn't like actually trying to break into this like new social media, but like instead just like fully focus on being the crypto casino of the world. Like then yeah, I would say go for the buybacks, but I don't see how they're going to be able to like kind of break out of this crypto market if they're not willing to just spend a ton of cash on onboarding non-crypto people.
Yeah, I mean, my opinion on it is like I honestly don't even think they need to onboard crazy streamers. Like, I think that like them doing the like streaming social side of it, I think that like in my opinion, if I were going to do it, the best way to do it would be go crypto native. So get some of like maybe the best crypto native streamers, right, that aren't like super expensive to get, and then you work your way out, right? Because like we've seen projects before, they try to go Web two immediately and like appeal to that Web two audience more than crypto natives, and it usually just doesn't work, right? So in my opinion, like yeah, I kind of agree with you, like to a certain extent. I think I think the buybacks are very bullish in the short term, but they are definitely going to have to spend a lot of cash to get their full platform up and running. But I think we've seen that like they're doing a pretty good job of that too. Like, the way that they've changed their creator fee mechanism to support more creators at the earlier stages. It seems like people are now like they are getting like some bigger like influencer kind of streamers coming onto there. And so yeah, I don't know. I think like signaling alignment is super important at that point in time. And like as we saw, it's very the launchpads like have really a very, very shallow moat, if any. And Let's Bonk was able to disrupt that super easily. So they kind of had to like, tail Let's Bonk in terms of what they were doing to win people back. And from here, I think they just keep on building out their social components, right? Like, take it easy. I don't think this has to be an overnight, like we onboard the biggest streamer in the world and then we blow up like that. To me, I would much rather see organic building coming from within the crypto native community and spreading out. And I think that to me, they'll have not that hard of a problem onboarding people to the meme coin side of things. Obviously, streaming is a lot harder, but I've seen, plenty of normies who love playing in the meme coin trenches. And I think that's going to be their biggest avenue of onboarding people from outside of crypto into crypto. So like the token side, the meme coin side, the volatility, the game that's being played there. And then on the streamer side, I think just go, Web3 crypto native up on that part.
I tend to be more on the buyback side than you, Ryan. I think we agree that for smaller protocols where the revenue is in the, I don't know, hundreds of thousands, like pretty low, yeah, you're better served finding other ways to use that to grow your protocol. But I think the opinion of just use your revenue to grow your protocol lacks nuance oftentimes. I think it's extremely difficult to find ways to use revenue to grow your protocol long term with sticky users or sticky liquidity. There are ways that I like quite a bit, whether that's early on having that revenue be used for your core team, right? And building new products, things like that. So rather than it going to the protocol, just have it go to your team and reinvest that way. Or protocol owned liquidity for DeFi protocols. I like these methods, but once you are mature and you're generating revenue to where if you do buy back the token, it could have an impact on the token price. I think at that point you can start thinking about distributing that revenue for a buyback. And generally, I'm in support of that because at that point you have a token, you've probably raised large amounts of money where you could use those two pools of cash or tokens to reinvest and do other things with revenue. And like if I'm Pump, for example, just raised $1 billion, I have whatever billions in Pump tokens to distribute. I'd rather use that money to grow the protocol in whatever way, and then use the revenue to support the token price. They're making a bunch of millions every day. So I think it's more valuable at that point to have the price be going up and people are talking positively about the project, about the token. It makes people want to trade more versus using those few millions, which are a small portion of what they have in total when you add up what they've raised and the token value. So that's how I see things.
I agree with a lot of that. Like, obviously, we're not privy to what Pump.fun is like plans are and everything, but they're like when they announce a token, they're like, we're taking on Facebook. I just find it very hard to believe like they have enough cash to actually do that, and like they're going to need their revenues to also support that. Maybe like in the short term they have enough cash, but like long term, there's just no way they're $5 bill FDV making $2 million a day. Like to actually take on Facebook, take on these big social media platforms, like they're ants. Like they need as much capital as they can get. And maybe right now it seems like there's like no good ROI opportunities for them other than like buybacks, but like I find that hard to believe if they're like going for the dream scenario of like they cement themselves as like a social media platform that is a part of everyone's like daily social flow or whatever.
But I think like Take on Facebook is very different when it's coming from a project like Pump.fun versus like X Web 2 project that's trying to make a social media platform. Like these are two totally different form factors. And I think that Pump.fun, like their ability to get people into this game, it comes from the actual volatility of meme coins and playing on that versus like this is just inherently a better social platform for whatever reason. Because like if you're trying to build a new social platform without some sort of other mechanism that's like novel, it's almost impossible. Like, you know, there's like a graveyard of Web 2 projects that have tried to create the new TikTok or the new, you know, Instagram or this or that. And they use like these different mechanisms, right? I forget what the one was, but like they pinged everyone at the same time of day to all take a picture together. I don't know if any of you guys use that, but there was something that like got a good amount of traction, but it's just a different game. Like I think that at least to me, I view Pump.fun as that part of things, like the social media second. And it's a part that supports the game, the underlying game that Pump.fun is bringing to the world. And I think eventually, if they are really successful in their mission and they actually do create a social media platform / like entertainment multiplayer platform, the actual money that they make from the launchpad might end up being like not their, you know, biggest vertical of revenue, right? So then over time, that would be able to subsidize everything else on the platform. So I think it depends on how, like, and again, like none of us are inside of the minds of Alon or like any of the people on the team and like why they're doing this, but I could see over time this strategy making a lot of sense, just as like an initial, you know, kind of like get people on board, get the community going, get more people into this game over time. And then once the streaming part of it, honestly, they might even do more than just streaming, right? Like I think they're just trying to make the whole experience a lot more social, a lot more multiplayer. And once that really kicks off, then you can get a place where you get actually sustainable revenue from that. And the launchpad becomes maybe even like a loss leader in that situation. And obviously that's like a pretty big end game, right? Like that's not going to happen in a year. That's not going to happen in 2 years. We're talking about like 5-10 years out if they're able to sustain this and like they really do fulfill the vision of this being one of the most popular like games in the world. And I personally do think there's like almost no other game that offers the same amount of adrenaline and dopamine like going into it. It's just there's a reason they were able to scale to $700 million like of revenue in a year. So yeah, I don't know. Those are just my rambly thoughts on it.
You know, I do want to say I do agree. Like, if their end goal is kind of this launchpad meme coin casino, I'm not really sure what else they can do to grow it. So, like, I do think buybacks make sense if that's like the immediate way they're going to grow this platform. I just don't think it makes sense if like they have these larger aspirations.
Yeah, let's change the topic a little bit. We'll head over to Stripe and its L1 just got announced. And it's officially being called Tempo. Matt put a little Matt Huang from Paradigm, who's going to be the project lead or the lead over there. And it's all about a stablecoin infrastructure chain. We've heard about rumors for a little bit, but we got the official announcement last week. They're partnering with Anthropic, Coupang, DoushaBank, DoorDash, LeadBank, Mercury, OpenAI, a lot of Web2 companies to going in. We also saw the Google GCUL L1. We've heard about ARC for a while. And so like generally, what do you guys think about these corpo chains and like rerunning the like 2017, 2018 distributed ledger conversation? And like, what does this do? I have some opinions where I think Stripe could be, or the Tempo one could be the actual most successful just because of their distribution angle. But like, what do you guys think about this? And like, are we going to see more specific Web2 companies that are crypto adjacent? We saw Robinhood coming on with their L2. And so what do you guys think about this announcement? And what does this do with the competitiveness with our decentralized L1s and non-corpo chains?
Yeah, I can start. So I think the first thing is everyone's talking about it on CT, from stablecoin founders to just investors to even more like corporate type of entities. So I think this is clearly grabbing everyone's attention across the board. So I think the first thing to recognize is like the main comparison that people make to Tempo is to Libra, which is Facebook's similar stablecoin chain, I think launched in 2019. They ended up not being able to really go to market because of the regulatory environment. So their CEO has a pretty well-known post on Twitter, how he tried to spin it out, how he, went through every edge and crook and cranny in the government to get it approved. They got through everything. It was what you call like a Frankenstein of the original vision, but it would have been regulatory compliant. And then allegedly Janet Yellen told the Fed chair Jerome Powell to basically make the Fed disapprove of it, or at least signal to the banks, and that basically tanked Libra. Now we have the opposite regulatory environment. So Tempo just has no barriers. In fact, they probably have support from the government. So there's really nothing holding this back from a regulatory standpoint. So what does that mean? I think it's pretty clear that Stripe's involvement gives them a massive distribution advantage. So a lot of people are commenting that this is like a one-time opportunity to completely rewrite the financial payment stack, to go after Visa's business, MasterCard's business, and integrate Stripe's existing operations and capabilities to basically fully own payments globally on chain. And this is probably, the most appealing or wide open opportunity to do this that's existed in decades and might, exist for the foreseeable future. And I think people are very afraid. Builders who've been, starting stable coins, even the L1s, Solana, Ethereum are concerned that Tempo is not, building as an L2 or building on another chain. And I think that concern is valid. I think a lot of the argument to be a monetary premium one day is we're not just going to have crypto, we're going to have tokenization, we're going to have stable coins. We're going to basically be NASDAQ on chain and Solana argues, or we're going to have all financial activity on chain. And if Tempo comes in and starts stealing the space or market share in the stablecoin space, this could likely extend to equities, tokenized real estate, tokenized fixed income, and they start to eat a lot of the potential TAM of all of the L1s, the L2s, and that's very threatening from a competitive standpoint. So the question is if Tempo can actually do this. I think a lot of people are rightly pointing out that the extent of permissionlessness for Tempo is dubious. They've claimed that they're going to do progressive decentralization. We'll see. I think every project says that's their roadmap, but given how many corporate entities and probably behind the scenes the government's involved, it's doubtful that it's going to be fully permissionless. So, Tempo has the ability, given a relatively stable geopolitical climate, and just political climate in the U.S., to win a lot of market share, maybe become the premier payments chain, and then start winning all of tokenization. But I think it's really going to be the stress test that will happen due to any black swan event or, macro direction down the road where the government might start threatening the integrity of the chain and asking for censorship resistance. And at that point, does Tempo have enough market share where they can, continue as they were, and it's kind of like the existing banking system where no one can really leave, or will it be easy to migrate to another permissionless L1 at that point, given that it's crypto? And that's far away. It's a big question mark, but I think that's really the real security concern, is that if Tempo wins on distribution, can they really provide the essential attributes of the blockchain? And that's a big question mark. So yeah, how I would look at this overall, since I'm ranting a bit, is one, will they win on distribution? Can they just tap into backends for payments globally and just get all that volume on chain onto Tempo instead of that? I think people were hoping that it would go on other permissionless L1s or L2s. And then second, are there going to be events that threaten the integrity of Tempo and cause people to see the real value of permissionlessness and censorship resistance and self-custody and other attributes of crypto? Yeah, so those are my thoughts to start.
Does anyone want to follow up on that or take the other side and like, is this net bullish for the space? Is this bad? Who does this hurt the most, and who does this help the most? I guess is a good question from the world we live in, from the on-chain and the Ethereums, the Solanas of the world.
I'll kick it off. I think this hurts everyone but Bitcoin. I'm really starting to doubt any native asset of a blockchain having some sort of monetary premium. I think we're firmly like in a pragmatic approach to blockchains at this point. Like I think we tried this whole like ideology part of where censorship resistance and decentralization, and I think there will always be like a need for that, but I don't think you can just describe like sky high valuations anymore because like a project is pursuing that. I think we're much in a world where people are going to use stuff that is helpful for them, and unless like we go like full financial doomerism, like the reality is like a Stripe blockchain designed around payments that makes people's lives easier is going to be a lot more important than like having decentralized access to a store of value. So I like going forward, I'm like very much of the opinion, like you need to separate blockchains from their underlying assets and like treat these as two different things. I think Bitcoin is a good example here. No one uses the Bitcoin network, but everyone uses BTC, the asset. I think we're going to continue progressing upon that like trend. And like if every corporation that's onboarding the crypto is launching their own chain, whether that's an L1, L2, proof of authority chain, whatever, it doesn't matter. I think the reality of the situation is we're going towards a super multi-chain world, and there's not going to be like any singular platform that's a winner. And in that world, I think it's hard to justify native assets of any individual chain like becoming the predominant form of a non-sovereign digital asset. And I'm just very bearish on like whether like maybe how do I want to word this? Like I'm bearish on all these L1 assets being treated as money going forward, and like they're going to be definitely valued a lot more based on like how fundamentally useful they are.
I would agree that it's more so bearish for the assets, like network level assets. But I think it's for sure bullish for crypto. Like we talk about people using this technology, I think it's only good for that. And if you have something like this take off and you imagine a world where people are actively using stable coins in some form or fashion, or using apps that highly leverage crypto or blockchain or stable coins, I think that's good. Like you increase the proximity that all these people are to crypto. And I think that increases the likelihood that people start doing things on chain. Like using the internet might have been tough, but like if you have a smartphone that's internet enabled, or you have a computer, then you start playing around, you learn how to use it, and then you fast forward 10, 15 years and now everyone uses it and is familiar. So I think it's only good for crypto adoption, and yeah, I think it's a net positive for crypto.
I agree with that. I think ironically, I think it's more bullish for, I think Tempo is ironically more bullish for Ethereum than it is bullish for Stripe itself, because what they're doing is although Stripe owns the distribution, which is extremely powerful, they're owning a payment network, whereas building a whole network with asset liquidity is a lot harder and takes like years. Like Ethereum's been around for a decade now. It's a $500 billion asset. You can't just launch a payment network and expect billions of dollars in TVL to roll over and payments to start happening. Like they already own payments, and they're launching an L1 for regulatory reasons and to own the back end. But ultimately they're educating people and making people use crypto more, which is net bullish. And if people want to trade assets like wrap Bitcoin or something, they'll be bridging over to ETH or Solana or these other networks that actually have deep liquidity. So I'm actually pretty bearish the payment network itself, and it's pretty bullish for ETH and other L1s that have deep liquidity on them.
Yeah, I mean, it makes like I think it just makes the most sense for Stripe. You know what I mean? Like at this, like if you're a corporation that's doing the amount of transaction volume that Stripe's doing, you're not going to want a dependency, right? Like any sort of dependency, right? So L2, L1, like whatever, like you're going to want to own that infrastructure yourself, because like you can, and just B, like, if something goes down, if something happens, like that's an absolute disaster for your entire business. So I think like even before Stripe announced this, like that would have been my prediction if any of these big players came in, is that they would just build their own infrastructure because they kind of have to at this point. But I do agree with you, Corbin. Like it's interesting because the more companies that come into it, whether they choose to build their own or build on something else or build an L2 like Robinhood, it is just like more legitimization of the space, more exposure to the space for most people. I think we're still in that place with crypto as an industry where that's really necessary. Like I think the reputation that crypto has is like still so low among like most of the public, right? Like we're in this little bubble, like everything's great for us, whatever, like TradFi starting to come in, but you talk to anyone on the street and they're like, oh yeah, this shit's a scam, right? Like if they're not a part of it. So I think anyone who's coming in, like Stripe's such a legitimate player, like a company that everyone wishes were public, comes in and says, hey, we're actually going to start an L1 and we're making our venture into this space. Like, yeah, that is just at the end of the day, net bullish.
I think one good thing that's really going to come out of this is just the UI UX. I think Stripe is going to be able to like abstract all the blockchain stuff away. So I think that's net bullish. But a question for you guys is like, how does this look in practice? Are we going to have like a Chrome extension? We connect to the Stripe L1 with our MetaMask Grabby wallet. Will there be an Aave Uniswap on this chain, or is it going to be? I know Matt said that like anybody's going to be able to deploy a token, but it's going to be permissioned at first with a validator set. And so like, how do we see this? Is it going to be very Web2 companies coming on and experimenting, or do we see some of these large players that we're used to for the last 5-6 years going and actually deploying on Stripe L1 and seeing actual use cases and transactions being on the Stripe One from the DGen crypto community that we all know and love?
Yeah, that's the part that kind of confuses me. Because, like, I mean, if you're an Aave, right, like, of course, it's EVM compatible. Like, kind of why not, right? Like, deploy, see if something happens over there. But, like, I don't know what they imagine getting built. Like, do you guys have any ideas on, like, just the types of apps that are going to be built? Like, I assume, like, some sort of lending thing, right? Because like the, B2B transactions, like some businesses are maybe going to want to be able to, get some leverage on the money that they have sitting in cash. But like, I don't know, I'd love to hear from your guys' perspective what you see being built out as an ecosystem over there.
Yeah, I mean, this is why I'm, as of right now, it's still really early, of course, but as of right now, I'm pretty bearish the networks that are launching just as payment networks. Because if you're just building a payment system like Venmo, I don't see like millions of users just suddenly using your stablecoin along with your other payment network that is an layer one. But if you're competing for yield, say you're a DeFi protocol like Athena and you launch an L1 and you're say, hey, the yield is going to be embedded into the layer one. Now people are incentivized to actually go and use that yield or use that network because the yield, now the assets are composable and the yield is just embedded and it makes for a smoother user experience. But if you're just switching from, if you're like retail and you're just switching from Venmo to Stripe, I don't see how it's super beneficial. Although there are a lot of, as I say that, there are a lot of competitive advantages in the B2B network space and cross-border payments. But yeah, it's hard to tell.
Do we know to what level they're saying this is going to be permissionless? I saw some posts floating out there, but that was more around the validator set. But what about deployment? Like, I don't see how you could have permissionlessness at that level if you're trying to build a stablecoin.
Well, so the thing is, my understanding of it at least is they have like a priority lane for payments. So it's kind of going to be separate from like the transactions that are going through for something like lending or borrowing or other DeFi activities. Could be wrong on that, but I think that's kind of like the infrastructure part of it that I saw. So yeah, I mean, I think in the post, like they were saying it's going to be like what Ryan was saying, like you can deploy a token, like it's going to be completely permissionless. But yeah, I don't know if anyone has more up to date information on that.
I mean, I like that for the crypto.
Yeah, Matt said on day one.
And kind of combating some of the concerns. Sorry, Matt, I think there's some latency, some lag. But yeah, I like that aspect. But at the same time, if you're trying to build a stablecoin chain, I would just go all in on that and trying to make it as good as possible for that use case. And I just don't see maybe there's a world where they could alleviate any technical drawdowns from making it permissionless, but I don't know if that's possible. Like there must be some trade-offs.
Yeah, Matt tweeted and said on day one, anyone will be able to deploy a token and anyone will be able to transact on the chain. But then in the next paragraph, he also said they're going to start with a permission validator set to get going and decentralize further from there. And then there'll also be permissionless smart contract deployment. So it looks like Chris was saying, there's going to be a dedicated lane for payments. But then the RWAs and the Uniswaps can go launch there, or forks of them will be able to go over there. But let's stick with stablecoins, but we can change the subject a little bit. Saw that Hyperliquid wants to launch its own native stablecoin. So I'll kick it over to you, Patrick. But we saw a lot of proposals for issuers to handle that. And so give us the details. What are these revenue share programs going to be look like? Who's coming in and trying to own that distribution? Because I think it's like $5-6 billion worth of USDC is currently sitting on Hyperliquid. And so what does this mean for USDC? And then also for all the players that are, or all the people that are sending these proposals in?
Yeah, I caught up on all this today, got into the weeds a little bit in the Hyperliquid Discord. I think it's super fascinating that this is all playing out in public. It's a bit of a rushed process where apparently some parties knew that it was going to happen, had some proposals ready, or maybe they were gearing up for it in advance, kind of speculating a bit. But it is a pretty fast process to not have been aware and then just try to spin up a proposal to be the stable coin on Hyperliquid. So there, in some of the initial proposals, there was a lot of buzzwords and kind of lack of specifics. So teams have had to refine their proposals, and the community has begged a ton of questions to be answered by each of these teams. But there's one big question or trade-off I would say that's being considered, and that's going with an established provider with a solid longer term reputation versus someone that's more Hyperliquid aligned and has shown some level of commitment in the past, building on Hyperliquid or being active in the ecosystem. And so there's a few different proposals that have a legitimate shot. Paxos is a big one. They're doing that in partnership with Molecular Labs, which has been active on Hyper EVM through the Looping Collective, and they have issued the L-Hype staking or Hype derivative that's deployed across the Hyper EVM and different protocols. They have wrapped HLP, and so in that proposal, Paxos is offering 95% of stablecoin revenue to buy back Hype through the assistance fund. There's also some partnerships like Venmo and PayPal that they're proposing on and pushing. Then there's Agora, who has the AUSD token, and they've got ties with Fanac, Paradigm, Dragonfly. For them, they're proposing 100% of net revenue. So there's been some questions as to what that net means versus for Paxos, it's just a straight 95% of all revenue. They're partnering with some folks like EtherFi, but there's some concerns about their history of maybe putting Hyperliquid in a negative light, calling them an L3, things like that. There's another one, Frax, which is kind of in between that established provider and Hyperliquid aligned, where they're more crypto native, and they're building some cool things on Frax that are Genius compliant. So they're making a bid. And then another interesting one is Native Markets, which is a new entity spun up specifically for this by Max Feege, who's a Hyperliquid OG, and some other folks, for example, from Uniswap, that are partnering up there. And they're doing that in partnership with Bridge and Stripe. So those are the four leading candidates, I would say. And there's still a lot of discourse going on, some concerns over reliance on third-party providers with something like Bridge and Stripe, whether it's going to be totally native stablecoin or kind of a wrapped version that's a wrapper for a different stablecoin. There's also the case of how to use funds and revenue, and conflicts of interest as well. Someone like Native Markets, this would be their Hyperliquid stablecoin. They have some skin in the game, versus Agora, they have AUSD, which is across all different blockchains. So what's the interplay there if they were to launch USDH? But as for the timeline, there's a lot. Today is Monday, September 8th. And tomorrow on Tuesday, there's going to be some spaces with the different teams. So they're going to kind of be pitching in public there. And then Thursday is the deadline for validators to signal who they'll vote for. And then there will be a few days for stakers to shift their stake to validators that they are aligned with their vote. And then the official vote as of now is going to be on Sunday. So pretty fast moving process, a lot of massive players involved in this. And we'll be interested to see who ends up winning, or I don't know if the vote ends up getting delayed to provide for some more time. We'll see.
Is there any information on implementation timeline? Like once whoever wins on Sunday, do we know how soon this will get implemented? And where does what happens to USDC on the network after they go with the new USDH?
Yeah, so I don't believe there are any timelines. This vote is simply for the USDH ticker and the right to issue a stablecoin with that ticker. Hyperliquid has been pretty clear in saying that this, trying to not make it seem like this is the king stablecoin now, but you'll get this ticker. It will be prioritized and kind of be seen as, okay, this is the Hyperliquid stablecoin, but USDC will still exist on the network. There will still be auctions to purchase, quote, assets for any stable coins. So yeah, USDC will stay. I think there's still plans for native USDC. This is just kind of the official Hyperliquid stablecoin, which obviously Hyperliquid teams or protocols will work closely with adopting it and making it available, and I'm sure it will grow, but there will still be other stablecoin options on the network.
So is USDC going to remain the pair for perps trading or the denominator even after this, or like what's the deal with that?
I don't think there's been any announced plans. I believe, I'm not sure if Hyperliquid would expand USDH to be either collateral to trade. I do know that there's going to be HIP3 markets or front ends exchanges that go live that will offer different assets that you could trade against, whether that's USDH, that's like a guarantee. Some of these proposals have talked about partnering with HIP3 exchanges and having USDH be collateral there, but I'm sure there will be ones for Bitcoin, ETH, Sol as well.
Yeah, because I feel like in TradFi markets, I don't know if this is priced in yet to Circle or not, because I was just looking at the chart, like there was a pretty big dip on Friday morning, went down like, I don't know, 10% or so. So maybe this is like getting priced in a bit, but it's like a significant amount of USDC on the network, right? So like, I think maybe this is also kind of a canary in the coal mine for just Circle's performance moving forward too. And just realizing that issuance is commoditized. You know what I mean? Like there's not a ton of defensibility there. And that was probably part of their move to launch their own chain and everything. But I don't know. Do you guys have takes on like what this means for Circle in the future?
Yeah, I think it's like 7 to 8% of their total circulating supply, which is obviously a big portion. The question you posed of will you be able to trade against USDH, I think is a big one. You saw something like Kinetic launch, and like 10% of the supply went to staking with Kinetic. So there's a big demand to go with some of these Hyperliquid focused protocols. And if you could trade against USDH or USDC, I think a ton of supply would shift to USDH, especially because it is supporting Hyperliquid and the Hype asset that you hold. So it's kind of a no-brainer.
Yeah, I think a lot of that move could also be because of the weak job reports and just saying signaling interest rates. Corbin probably can speak more on that. But then also this is another tailwind that probably is bad for Circle. But Corbin, I know you're about to say something.
Oh, yeah. No, that's a good point. I think it's hard to tell if the people that own Circle even understand Hyperliquid. I think my guess is most of them just think stablecoin. They see they see Treasury Secretary Scott Bessent saying stablecoins are going to 10x, and Circle is basically the only way to allocate to that information. So they bid Circle, and at least initially that's why they IPO'd and performed so well post IPO. But post that, it's honestly hard to tell. It doesn't really seem Circle trades with crypto. It seems like it trades closer with TradFi expectations or policy expectations.
Yeah, that's fair. I mean, I don't know. Maybe again, could be misunderstanding this. Definitely not my like area of expertise, but it seems like Circle's kind of cooked. I don't know. Like this just seems.
I was about to say the same thing. It's over.
Because like even you think about something like Stripe, right? Like you would imagine at some point maybe they launch their own stablecoin, right? Or like I know right now it's like they're using USDC and then they're also using Bridge's native stablecoin. It's like USDB or something like that. But you'd imagine like any sufficiently large blockchain could do this, and it's just like a massive. I mean, like obviously, like whatever Ethereum, all that shit, but it seems like it's a massive like headwind moving forward that this is happening right now.
Yeah, as far as like within the stablecoin sector, they seem cooked. I think they could be saved by the fact that they are just the second largest stablecoin, and the treasury pushes stablecoins so hard because stablecoins are big treasury purchasers, but they would just be growing quickly with the overall stablecoin market. I don't see how they can outcompete though.
One interesting thing that came out today that I did want to talk about was Mega ETH as well, announcing that they're partnering with Athena to launch a native stablecoin on their chain once it goes live. And with Hyperliquid, if we assume that USDH replaces all of the USDC on the network, that would bring in over $100 million per year in Hype buybacks, which is massive. And now you're seeing a similar thing with Mega ETH, where as the stablecoin supply on the network grows, part of that value will be accruing to Mega ETH and potentially the Mega token. So I think there's been an expansion in stablecoin issuers and suppliers over the past 1 to 2 years, to now there's so many different options where these big networks that are going to be growing and have a lot of excitement around them, they kind of have the leverage now where they can capture a portion of this value, and the stablecoins actually need to compete for that business. And I think the dynamics are changing a little bit for L1s, L2s, where that could be a net new source of revenue generation for them. And I think it'll be harder for older networks to go down this route, but you could for sure see someone like Arbitrum with their treasury. Let's say they did a similar proposal to Hyperliquid. They launched a native stablecoin that benefited ARB token holders in some way. They could then use the treasury to incentivize that liquidity growing and that stablecoin growing to a point where Arbitrum has a new revenue generator on the network. So this is something new that I'm going to be keeping an eye out. It seems to be just emerging, but pretty exciting for L1s, L2s.
Yeah, I see kind of a battle coming up between the stable coins. Well, there's only really one. There's Athena that offers yield versus distribution. Like it's all the stable coins on competing for the Hyperliquid native stablecoin are all just basically debating their degree of distribution and quality of partners, collateral partners, where they hold their T-bills. Like how safe is the T-bill holdings, and then how much money of the T-bill holdings can you give to the users, essentially. And then you have Athena, which isn't arguing. They don't even have like a good solid tier 1 exchange listing yet, and they're just offering yield, which is extremely competitive. And then I think this is just going to turn into more and more of a battle as interest rates go down, and if funding rates go up, then Athena doesn't even need to argue for any distribution. It's just pure yield. So it'd be a very interesting battle between distributors and yield givers.
Yeah, I was gonna say it would be quite funny if like this is something every project starts focusing on while rates just go to zero. this additional income that they're gonna have just evaporates. That'd be very on brand for crypto, and would not shock me if that's actually what ends up happening.
Well, I think that's why they're so quick to give up 100% of the revenue, is because they're like, we're not going to have much revenue in the next few months. So we'll just give it all to you, and then we'll have a massive brand equity and distribution. So it's kind of funny.
I will say it is pretty wild to see how much these proposals are kind of caving to the ethos or demands of Hyperliquid. Like 100% of net revenue or 95% of total revenue. Those are massive amounts, which is great to see, but pretty impressive.
Yeah, I'm surprised no one's offered like equity on top of their net interest, like equity of the company, or they have a cash reserves and throw like a 10 million, 12, $20 million bonus or something. I feel like it's only a matter of time.
It's been kind of nice to see, though. There is a very large focus on compliance here, which maybe you wouldn't expect on first glance for something like Hyperliquid and stablecoin going live there, but there is a massive focus on compliance and Genius Act and traditional finance, banking partners, things like this. Yeah, like securities laws, all this. I don't think teams could throw. Hey, we'll give you equity. A big compliance focus here, actually.
Patrick, before we finish with some exotic real world asset talk that I know Ryan's excited to get to, what's do we know any TLDR on Mega ETH mainnet?
I believe the team has been saying sometime in the next couple months. I don't know when, but next couple months, hopefully. That'd be my hope. We'll see when Monad comes out as well. It seems like they've been ramping up and doing this card program, Pokémon on chain, X profile cards. So yeah, we'll see what happens with both of those. But those are the two big networks that are probably going to go live here in the next few months.
Yeah. Speaking of Pokemon cards from the Monad team, we can kick it over to some other Pokemon cards that has been kicking off with all these exotic real world asset, which I think is what Ryan is coining the ecosystem, the term, the meta that happened last week. We saw cards jump over 1,000%, which is the token related to the collector project over on Solana. We also see Courtyard has been pretty successful over the last year over on Polygon. So I'll kick it over to you, Ryan, to give the official definition of exotic real world assets and why you're pretty bullish on this space in the next couple months, short term, long term, whatever you want to highlight it is. But what are exotic real world assets?
Sure. So how I think about exotic RWAs is that these are tokenized versions of assets that are not like inherently financial. So traditional RWAs, right? Like you tokenize a stock, like that is a financial asset, right? Whereas an exotic RWA, we are tokenizing a Pokemon card or maybe one day a watch, or one of the more interesting ones I've seen is tokenized like wine and liquor bottles. So like these aren't inherently financial assets, but like these assets get traded. And I'm super bullish on this because I think it makes most sense when you compare it to like traditional RWAs, right? Like take something like tokenized stocks, right? Throw those on chain. From the consumer perspective, like you're actually just giving me a completely shittier experience, right? Like why would I go trade these things on chain when trading them through my brokerage through Robinhood makes complete sense. It works better there. I'm only bullish on like RWAs, like traditional RWAs, if like the actual brokerage or the touch point for the existing RWAs, like, yeah, we're actually just going to force you onto the system. So something like Robinhood chain, I think does make sense long term if they just like tell all their users like these are now RWAs and you're trading them and you're not going to know. Compare that to trading something like a Pokemon card, right? Like, let's say I want to go pick up a PSA 10 1999 base set Charizard. How do I actually go do that? Well, my options are go to a store, go on eBay, or go on social media. All those require like massive trust assumptions. Personally, I'm more interested in baseball cards, and like how I've been acquiring cards I want is like through people on Reddit. And I'm just assuming they're not trying to scam me. I have to go like read the reviews and shit like that. Like it's not a good experience. If you're able to like actually tokenize all these things and put them on a platform, you've completely eliminated that like trust assumption. Like now you're just trusting the platform. It's a lot safer. And the added benefit now is like you just want to trade these assets. It's so much of a better experience, right? Like if I was just trying to like arbitrage Pokemon cards, right? Like I have to wait for delivery of these assets, that could take a long ass time, and maybe the arbitrage opportunity is like gone by then. Versus if these are all tokenized, I have instant delivery of the NFT. I can now trade that right away. And the cool part actually is if I'm a collector, I don't really care about like having the delay where now if I get the instant delivery of the NFT, I have to go redeem that. That's not any different from a delivery standpoint of the regular asset. So like the user experience for traders greatly improves, and the user experience for collectors is the same thing. So yeah, I think like Pokemon cards are like the first like 0 to 1 moment for this, where it like actually makes sense to put these things on chain and trade them. But I fully expect like over time for this to expand outside of just like collectible cards and very different. I think we're going to tokenize a lot of stuff. But yeah, like my bold prediction is like actual like user adoption rates of exotic RWAs will surpass those of like traditional RWAs. So I'll leave it there if anyone else wants to disagree with any of my thoughts or whatnot. But yeah.
I'll disagree on some of it. I like the thesis. I could see that playing out of exotic RWAs outpacing the growth of traditional, but and I also agree with everything you said about it being useful. The use case is totally there, makes sense, but I tend to lean towards this being a shorter term narrative. There's really this could have been done at any point in the last several years, and I'm not sure how long Courtyard has been live, but it just seems like a bit of a flash in the pan that will be gone in the next few weeks. And maybe because of this hype cycle, there's some increased building in the area where at some point down the line, yeah, you get your watch protocol, your whatever jewelry protocol. But I don't know, I just can't see this being in the limelight for multiple months.
Well, okay, so there's a difference between this being a narrative that's tradable and this being a narrative in like an actual use case for blockchain, because like cards is the first, I think, tradable asset that we've really had to be able to express this view. So of course it comes into the narrative of like CT and everyone's talking about it and everything, but like with what you're talking about, like watches, right? Or we can talk about like Baxos, which does like liquor, they do like whiskey trading on chain, RWAs. Like watches, that's been around for a while. Like there's an entire consortium, I think it's called R Consortium, that's like made up of a ton of like LVMH companies and like other luxury fashion goods, which are bringing these like goods on chain. So basically the way that it works, I wrote a piece on this a while ago. It's like digitally linked assets. So you get your Gucci bag and then you like scan this little thing, or like there's an NFC chip, and then you get basically the blockchain NFT of that. And that's really interesting because it has like all the metadata from the production too. So you can see like tracing it all the way back to where the, like silk was drawn from, and like making sure everything's ethical along the way. And like this even goes back to, like Walmart putting their supply chain on chain. Like if you go and you look up like Origin Trail, they've been doing this shit for so long. Like we have this on chain already. But so it's like from a narrative perspective and a tradable perspective, it makes sense that this is happening right now. But this as a use case for blockchain has been happening for a very, very long time. So it'll be interesting to see, like, say Baxos drops a token, right? Like that would add fuel to this fire. And, I think that could take the narrative longer. To me, it really depends on what drops and how many people are willing to like put out a liquid token that's tradable and like have some sort of flywheel attached to it. Like, because the TAM of this is absolutely massive. I think like kind of as what you were getting to, Ryan. So I think like the sustainability of the narrative is really just going to come down to like where are the new protocols coming from, and like are they pushing these? Like, are we going to see terminals being built on top of this where you have like being able to snipe different Pokemon cards, right? And like, are you going to have leverage on these things? Like, like there's so many different financial instruments that we can put in, because like, blockchain is composable. There's so many interesting, I think, like primitives that can arise from this. And I do tend to agree with you, Patrick, that like if cards is the last like company to do this and say like we are going to come out with like something liquid for you guys to trade, then yeah, maybe this narrative could die down and it will just hang out in the background like it has for the past 4 years. But then there's also, like, as I said, catalysts. Like if one of these major companies does launch a token, like that will just keep giving it narrative fuel.
Yeah, to add some additional color to my thoughts, this is not something that's going to like take place over the next weeks. Like I expect this to like actually like reach its final vision and form to be like a 2 to 5 year process. Like this isn't something that's going to happen overnight. If we want to like speculate directly on like Pokemon cards like prices, like yeah, totally, we're in a bubble. This is probably the last leg, is just like the fusion of these two things with crypto. An interesting stat that I saw was last cycle Bitcoin topped in November 2021. In the following 6 months, OpenSea did $19 billion in NFT volume. So even if we think like we're entering bubble territory with Pokemon cards, let's be real, we probably are. These things can last a lot longer than you think, especially if like we've found a new like liquidity source. But yeah, like I don't really care too much about like that angle of it. I care a lot more about like, can crypto actually offer a useful product to people? And to me, I think the answer is yes. And there has not been many ways crypto has been actually able to do that other than like attract a small cohort of people. But I think this is definitely one of them. Like Courtyard is actually the first example of like a crypto app that like my normie friends have used that was like not like just crypto based. Like they're like, oh yeah, we like Pokemon cards, and like sometimes we'll go on Courtyard if we want to gamble on them and shit. And it's like, wow, that's like, these are people that do not use crypto, don't care about crypto, and like actually using a product offered by crypto. So I think this could be a potential area where like crypto actually has like product market fit amongst a cohort of users it historically has not been able to onboard.
Yeah, I mean, it almost reminds me of kind of the way that Polymarket infiltrated the mainstream. How all of a sudden you just have people who are not crypto natives going on and being like, oh, this is just a predictions market that I can use to bet. Like I'm seeing this in the news now. Like I can see Courtyard kind of having that same like rise of popularity and like rise as a business making revenue where it's just abstracted away and people don't even realize.
Average Joe's talking about use cases, not narratives. We love to see it.
Yep. This is the Bitcoin maps.
Yeah, no, looking for actual metrics and users, and it'll be interesting in a couple months from now to see how many people are still using it and like seeing how people have onboarded to the platforms. But with that, we'll wrap with what are we doing on chain. So I'll start with just how I see it on my screen with Patrick. What are we doing on chain?
Yeah, largely two things. I mentioned it earlier, but some Solana gambling. Had some meme coins pop up, threw some money in there, exited. But other than that, some Polymarket usage as well. NFL season just kicked off this past weekend, which I'm super hyped for, and going to be doing some betting throughout the season on Polymarket.
Nice. We'll kick it over to Ryan. What are we doing on chain?
Yeah, kind of tailing off the exotic RWA stuff. Just been trying to figure out ways to get exposure to that. Main way has been cards, but there's been a couple other projects I've been looking at, stuff like Fitcoin, Charizard, Drink. So been messing around in the exotic RWA trenches. Looking at some stuff on Arbitrum, actually. Robinhood has a product announcement coming out tomorrow. Some on-chain evidence is pointing to they've deployed stocks on Arbitrum. So gonna keep my eyes peeled for that, but probably will try to figure out some ways to get exposure on chain. But yeah.
Nice. Corbin, what are we doing on chain?
I've been playing around with Polymarket a bit. I've been paying close attention to what's going to happen with rates. So I've been putting a bet for 50 basis point cut. This FOMC could definitely be wrong, but I think the market's wrong at 10%. So it's good odds. And then I'm just, as a extension of that, I'm also trading Athena. So because I think they'll benefit from lower rates as well.
Nice. And last but not least, Chris, what are we doing on chain?
So interesting development in my life. I just got this sweet play that I ordered maybe a year ago. I don't even know how long it's been. Time's crazy in crypto, but so I unboxed that. I played a few games on that, just kind of testing it out. Seems pretty smooth so far. So that's been my probably most interesting thing that I've been doing crypto adjacent. Besides that, just doing some perps trading on Hyperliquid. Nothing too crazy. Probably want to get back into some crypto gaming at some point, but haven't seen a ton out there. So yeah, that's it for me for now.
Nice. Yeah, similarly, I got my Seeker phone, showing the camera right now. where I got it last week and been playing around with that. Onboarded to Helium Mobile. So that's been fun, tweeting on the streets of New York and using a crypto protocol and all that. One of my favorite games so far is it's Only Farm. It's a smaller version of DeFi farms, which has been pretty fun, attending to my crops and making sure create my eggs and learning how to buy chickens on Magic Eden. But and then also messing around with the exotic RWA space and playing around and trying to onboard my normie friends to see if they have any old Pokemon cards that is actually worth a lot of money now. But with that, this has been a great episode of Shoot the Shit Pod number 13. As always, this is non-financial advice. Do your own research, and you can do your own research at Messari.io. Go read all these guys' great reports and everything we offer over there. And can't wait to be in your inboxes again in a couple weeks. So thank you, and looking forward to seeing you guys soon.